What's up, traders? One of the tragic moments as a trader is when we are hunted. When our stop loss is being hunted. And you might be saying, why always me? Every time I put my stop loss, they hit my stop loss and trade goes in the direction I want it to go. Why this happen? Can they see where I put my stop loss? Technically speaking, yes, they can see where you are putting your stop loss. But the reason is not that to hunt you. In fact, the market needs liquidity to move in the direction they want to move. Is there any way you can avoid it? To be honest, you can't avoid 100%, but you can reduce it considerably applying some techniques. So today I'm gonna share 3 techniques how you can avoid stop loss hunting. And at the same time, I'm gonna share with you my secret formula that I use to avoid stop loss hunting. To make sure you watch till the end of this video so that you know what it is. Sound interesting? Then smash the like button. For those who are new to the channel, my name is Nazam. I'm an author at TradingView and also a professional trader helping others to become profitable. If you're new to the channel, don't forget to subscribe. Just a quick announcement is that I will pick one lucky winner every week from the comment section to give my personal trading plan completely for free. So if you want to have this, then comment below yes. I will send it to you in the email. Thank you. Let's begin. First, let's look at this example. See, look at this chart. There is a movement to the upside with this green candle and there has been a pin bar is formed. So when a trader see this, they say, wow, there is a pin bar, I can trade this. Wow, there is a support, there is a resistance here. So this is a resistance and the pin bar is formed in the below the resistance, and also there is the trend is down. So the trend was moving down. Wow, I can trade this pin bar. And then what you did, you went for short. Say, you might say, wow, I can short from here. My stop loss is above this pin bar. Okay, and then maybe you can target say 1 2 2 or 1 2 3. You can say, wow, that's gonna be a good trade. I can risk hold my account and then replay. Okay, boom, they hit your stop loss and then move along the direction you wanted to move. Okay, so what is the reason why this happened? Let me explain first. So when you sell here, okay, this is the sell zone where you sell, right? And your stop loss is here. Okay, now when you see this pin bar, everyone else looking at the same chart, they also can see this pin bar. So everyone want to sell, even the bank want to sell here, right? Now consider a market. If you want to sell something, you need a buyer. Now as a retail trader, we have a very little capital, but banks has a huge money to invest. So when they have a huge money, they want to, when they sell a huge amount, they need a huge buyer to buy from them. So when you are selling here, say you are a seller here, right? You are selling here. Now bank also want to sell here. So if they sell here, they will not get the price they want. They need buyer. So what they will do, your stop loss is here, right? So when your stop loss is here, you are a buyer in this area. And that is what they take this advantage. They move their price here. They force you to become a buyer instead of seller. They hit your stop loss, take the liquidity from you and then move in the direction they want to move. And that is the single most reason why stop loss is being hunted. Now, is it something wrong that they are hitting your stop loss and moving? To be honest, it's not wrong, because that's how market works. If they cannot grab liquidity, then they cannot move the market. If they cannot move the market, then you and me also cannot move the market, and we can't do the business. Then is there any way that you can avoid this stop loss hunting? Yes, you can do something. Okay, the first thing you have to do is do not put your stop loss where everyone else is putting their stop loss, because this is the zone where they will go to hunt the stop loss. Now you might be asking this question, well, then how do I know where everyone is putting their stop loss? Well, you don't need to know where everyone is putting your stop loss. You only need to know where you want to put your stop loss. Where you want to put your stop loss, everyone else will put in the same place, because psychology works in the same way. So you need to do something different. So I'm gonna share with you 3 techniques that you can apply to avoid stop loss hunting, and 1 formula that will tell you where you can put your stop loss in a safe place to reduce stop loss hunting. So the first secret trick that you can apply to avoid stop loss hunting is don't place stop loss on an area of value, such as on a support, resistance, or on a trend line. Let me clarify. So first, let's apply this technique in the just example that we have seen. So first, identify the area of value for this one. So where is the area of value? See the trend line, the resistance zone is here. So this entire zone is a resistance zone. That is what you need to find out, the top limit of the resistance and the bottom limit of the resistance. So this is where you need to avoid placing your stop loss, because see, this is the maximum that the price has gone up, and this is the minimum where you are entering the trade. So in between this zone, you need to avoid placing your stop loss. I know this might be difficult for you to achieve the risk reward you want, but you need to find out a way to do that, because this is the zone where the price may move, fluctuate to test this area. Now let's see this example. If you avoid putting your stop loss in this zone, what happens? If in that case, if you take this trade as a short trade from here, and then you place your stop loss above this zone, so in that case, see, this green candle can act as a strong level of resistance, and in this resistance zone, if you put your stop loss, it is likely that you might be hunted. So let's replay this chart and see what happened. See, the price moved there in this zone and then hit your profit target. See, that's why you need to avoid placing your stop loss in an area of value. It is not a line, remember, it is a zone. So you need to find that zone so that you can avoid this zone when you are placing your stop loss. Second secret tricks: do not place stop loss in rejection zone. What does it mean? So it means that you have to avoid placing stop loss in a rejection zone. Say this green candle, you wanna trade this green bullish engulfer. You might say, well, there after this big movement, there has been a bullish engulfer. This is a strong bullish engulfer without even any wick at the bottom. So if you wanna trade this, so this zone in fact is a rejection zone. Why? Because when the price came here, it strongly rejected to the upside. So you need to avoid placing any stop loss in this zone. Why? Because this zone can be tested at any time. So if you place your stop loss in this zone, this is highly likely that you will be hunted. Then what happened later? See, the price came here. So if you place your stop loss anywhere, you will be hunted. Similarly, this example here, see, there is a red bar, the price has dropped and then immediately went up. That means this is a rejection zone. So do not place your stop. If you want to trade this one long, say for example, you want to say, well, I'm gonna long from here, okay, and never place your stop loss somewhere in this rejection zone. You always have to place your stop loss well below this zone before you trading this instrument. So what will happen if you see the price always come to test this rejection zone? Now you understood that you cannot place your stop loss in an area of value or in a rejection zone, then where can you put your stop loss? Well, I use a formula that I called zone limit plus spread plus 2 pip formula. Now let me explain this formula, then I'll show you in real chart. Say the market is, say, ranging like that, right? Like this. So where is your like resistance zone here? Say you wanna short from here, right? You wanna go short. Then where is your resistance? This is your resistance zone, right? You have to draw a resistance from up and down. So this is your resistance zone. Now, if you wanna go short, then according to this formula, the zone limit is, this is the top limit of the zone of resistance plus spread. So you need to find your spread in your broker. Say if you are trading Aussie dollar, if your spread is 2, then you need to add 2 pip with this zone plus 2 more pip for slippage plus 2 pip, and that is where you will be your stop loss. Let me show you in real chart. So the example that so far we have seen, let's see, apply this formula here. So this yellow area is what we call zone limit. See, so what does it mean? This is the zone, okay? This is the zone of resistance, top and bottom. So this is the top of the resistance, this is the bottom of the resistance. Now if you wanna trade this one, say short, if you wanna go short from here, okay, short from here, now this will be your zone limit. That means the resistance. In case of support, it will be the bottom limit. In case of resistance, it will be the top limit. This is the zone limit, and then plus spread. Spread, say if you want to trade euro dollar, then you might have a spread, say 2 pip. So add 2 pip with this one plus 2 more pip for the slippage. So your stop loss will be somewhere here, okay? So this is the zone limit plus 2 pip plus 2 pip plus spread plus 2 pip. So that is where you place your stop loss to be in safe side. Okay, so let's say this example here. Let's say you wanna trade this pin bar in the short direction. Okay, now how do you do that? The first thing you need to do, as according to our formula, is to find the resistance zone. So this is the limit that you need to find out to see where the price may come. So this is the maximum limit that you should not place our stop loss. Why? If you see, there is a, see, this is a support here, acted as a support here. Also the price rejected from here and then came, tested this level here, and also there are the resistance here, tested as a support. So this is where we should avoid placing our stop loss. Now this is the zone limit according to our formula, and if you wanna go short from here, take this, say you wanna trade from here, and your stop loss just above this high. So what we can consider 4 pip here, and let's see how this trade is working out. See, the price is now moving. Look at this, the price just crossed this pin bar. So if you place your stop loss above this, you will be hunted. Now let's see later what happened. Okay, the price is okay, just hit your profit target and then moved above 1 to 1.9. So I know that this is just an example, that I know that this is how it happens, but if you do a lot of back testing, you see that this formula really help you to avoid a lot of losing trades. I sincerely believe that you enjoyed this video, you found value in this. If you find value in this, smash the like button another time, and also subscribe to the channel. There is a lot of content that I will be sharing, or also I will be sharing every day. Thank you once again. See you in my next video.